In this video, I'm going to break down how I turned $10 into $1,000 in just 7 days. I'll show you the strategy that I used. Also, you'll see the pairs that I did this on. Right here is my trading account. You can see I deposited $10 right here. This is a real account connected to MT5 server right here. The demo account is down right here. You can see the demo account. You need a good broker in order to grow a small account. So do research on brokers and choose the best broker out there. This is the first trade that I took. USDJPY, a buy position, 0.02 lot size. That was an amazing trade. So I was just scalping. Then I had like $58. Then I took another trade on Euro USD, a sell position, 0.02 lot size right there. And this was a losing trade. I had to hold this trade until it came back to my position. I took a sell position on XAU USD gold from $10. Now we are at $69 right there. It was a good start for the week. I took some positions on Euro USD, a buy position. So you realize that I wanted to flip this account into 1,000. So I started upping up the lot sizes. You can't use a small lot size and expect more profits. Beautiful trade right there. 5-minute time frame, Euro USD. This is another trade that I took on gold, a buy position, 0.1 lot size. It was a sure trade, so I had to hold this position and it gave me a lot of profits here. 0.1 lot size right there. So that was a nice trade and it played out. So that was the third day. So I closed with $209 profit, $10 right here. You can see deposit $10. Right here is a trade that I took on Euro USD, a buy position. Another trade right here which I took on gold, XAU USD, a sell position of 0.05. Beautiful trade on gold right there. Another trade of GBP USD, a sell position. I'm at $500 right now, a winning start of the week, and it was amazing. I'll show you also the losses that I had encountered. There were a few losses, so I practiced risk management. Another trade on GBP JPY, sell position, upping the lot size, sell position of 1 lot size. Right here is an amazing trade on gold. I was sure in these trades, that's why I was taking so many positions. Reached $1,000, so you can see up there 720 profits running. I got greedy right there, and this was a losing trade and I took so many positions, so I had to get out of the trade as early as possible. You will encounter losses in the forex market, so how you plan your risk management and emotional psychology is what matters. Your profit should be more than the losses. So you realize that my profits will be more than the losses, so that is what we call risk management. So this was a bad day, a bad trading day right there. I took so many positions and it was a losing trade right there. Learn from the losses, then you make some changes here and there, then re-strategize your strategy and come up with a good plan to recover from the losses. So I show you even the losses, guys, so I'm not hiding anything from you. I ended up with $790. I entered some trade positions on GBP USD. Don't cling to your losses, cut your losses short. If you can protect your capital, there is always an opportunity for trading another day. An amazing trade right there, GBP USD, that made me come from $700 to $1,000. So I was risking a lot. No risk, no story, right? So actually I don't use stop loss. I just watch my trades and close them if price started to reverse. It's really that easy. Practice, get the knowledge, find the strategy that works for you and stick to it. Let's jump into the charts. Right here is the chart of gold. I always like looking at my general market condition on a higher time frame, like the daily time frame or the 4-hour. Gold had already broken this trend line right here, so I knew that gold is going to be bullish because I analyzed earlier. If you watch my previous video, I knew that if gold break this trend line, then come for a retest on a lower time frame, I'm going to be looking for buying opportunities. And you can see gold is making all-time highs. I came to the 4-hour time frame right here, the 4-hour time frame. Then I saw that gold had already broken that my daily trend line, so we are bullish. So I was looking to buy, and gold was forming higher highs, higher lows. Price was at this point when I was analyzing the market. I saw this triangle formation at this point. So this is the bullish wedge triangle right here, formation right here. So I was waiting for the breakout of this upper trend line right here. I came to the 1-hour time frame right here. I knew that I'll trade this trend line breakout, so I was waiting for the retest of this trend line on the 15-minute time frame. Enter for a long position, a buy position there, right there. Then I put my stop loss just slightly below that trend line right there, slightly below that trend line. So I was targeting something like 40 pips. So this is a trade that I took on gold. Going on, I identified that this zone right here is a demand zone. a demand zone. So at this zone, this is where aggressive buying began. Price had not come at this point right here. Yeah, price had started coming down for a retracement. Then I saw a fair value gap at this point right here. So this was my fair value gap at this point right here. So that is our fair value gap. So I anticipated that when the price will be coming to this demand zone, I'll be looking for buying opportunities. Once price formed this bullish candle right here, this is where I took my long position. I placed my stop loss below this demand zone right here, a tight stop loss, then my take profit at the next key level, which was here. So this is how I took this trade on gold, and it played so well. Let's go to another one. So gold was breaking structural highs. So this is the 1 hour time frame. Gold was breaking the structural highs to the upside with a very strong bullish momentum. And so this resistance zone right here. So gold had broken this resistance zone. Price came here, found a resistance, went down, came here again, found the resistance. So I knew if there was a breakout, price was at this point right here. So this is where the price of gold was at before I took the trade. I anticipated that this resistance is a possibility that becomes support. So I was waiting for my buy positions at this level right here, because this was a strong resistance zone. Then price broke it with a strong bullish momentum. You can see these big green candles right here. So these are strong bullish momentum. So I was waiting for a retest, a confirmation after coming to the 15-minute right here. So I waited for a retest and saw this doji candle, this pin bar right here, then this bullish candle. Then I hop in for my trade right here. I entered my trade right here. Then my take profit, I was targeting like 50 pips right there. And that is how the trade played so well. So at this zone right here, I saw price was rejecting this level. You can see sellers are losing momentum at this level and buyers are so strong at this point. So that is how I took this trade on gold. I was watching my trades as I move my stop loss into the profit. So I was breaking even so that if the price reverses on me, I will lose nothing. So this is the chart of Euro USD. So identified in the 1 hour time frame that there is a change of character, because the market was buying at this point right here. The market was buying uptrend. The market broke this last low and failed to break this high. The market failed to break this high right here. So after breaking this low, there was a change of character. We are shifting our momentum from the buy side to now a downtrend. So the price was at this point right here, right here. So there was a change of character. At this point, I saw a supply zone. The price was at this level. The price was at this level right here. So I waited for price to come up, then come down. Then I took this trade. I saw that there is liquidity at this level right here. There's a pool of liquidity at this point that needed to be swept. When this double bottom was forming right here, I wanted to catch some pips here as the market target this supply zone right here, this supply zone right here. So this is where I placed my trade, and I targeted something like 30 pips because I was not sure that the market is going to reach at this point. The next trade, I came here and so this was a double bottom. This was liquidity that need to be swept. So I waited for the price to reach my supply zone. Also, there was this fair value gap at this point right here. Fair value gaps that needed to be filled. When the price came right here, I didn't enter the market immediately. I went to the 15-minute. Then I waited for this liquidity sweep right here. There is these early sellers who came into the market to trap people to sell. Then there was this liquidity sweep. Then I took my short position at this point right here. I took my take profit at this double bottom right here. So I knew that the market is going to come to this double bottom because there's liquidity seated at this point, and the market is going to sweep this double bottom liquidity right here. This was a nice trade and this gave me a lot of profit on Euro USD. Let me show you how I took another trade on Euro USD. There is this trend line liquidity right there. Then price is breaking structural lows as you continue to the downside. We had a change of character. Then we were breaking the structural lows to the downside. I wanted to wait and see some sort of change of character to the upside because I knew this liquidity pool that is seated right here needs to be swept. Then I saw at this point right here, there was change of character because this is the last low right here. Here is the last low here. This is the last low and this is the last lower high. So price came down this way. Price came down at this point here. formed a pullback, then price went down right here, then broke that last lower high. We shifted from a downtrend, now we started forming a new high. After this choke, I was waiting for price to come for a pullback. I used my Fibonacci retracement tool at this point. Fibonacci retracement tool just tells you the end of a pullback so that you can get sniper entries in the market. The points that work the most are 50% and 61.8% level. So those are the points that I use the most. Price came here at the 50% Fibonacci retracement tool line right here. This was the 50% level, and that level was aligned with my bigger fair value gap at this point. I had so many confluences to take this trade. That is why I was confident to take this trade. There was a change of character, market shift from a downtrend, now we are going uptrend. Using my Fibo tool, I knew that the price started retracing back and I needed to know the end of the retracement. So I waited for the 50% level to play, and this was a fair value gap that needed to be filled. After I saw this long wick rejection at the 1 hour time frame, then I went to the 15 minute. I saw there was a big bullish engulfing candle, so I took my trade. Here you can see these are fake outs. I saw this long wick rejection at this point, then this bullish engulfing right here, a buy position, a long position. Then my take profit at that key level. My stop loss was slightly below right here because I took my trade at this point right here. And you can see this trade played so well and we hit the take profit at that point right there. So those are some of the trades that I took on EURUSD, and that is how I use my technical analysis so well, aligned with the smart money concept, and also scalping took part of my trading. So I like scalping a lot and always target to trade with the smart money. Trade with the big banks. The big banks are manipulating the market. Smart money are the big banks, the hedge funds. Those are the people responsible for the movement in the market. Implement 1 or 2 into your strategy and get more profits from the market. Leave a comment right there on what you want me to cover. See you in the next video.